Stocks taking a nosedive Friday following President Trump's tariff announcement that we just talked about. But despite turmoil in the global economy, the price of gold continues to rise. Right now, it's hovering near record highs, about $4,000 an ounce. Here now is Josh Schafer. He is the newsletter editor at Barron. So, Josh, first off, let's talk about the stock market. Why do we see such a steep sell-off to close out the week?
Hey, Perry, thanks for having me. So yesterday, what we saw in the market is really you've had a market that has just sort of floated higher for the last couple months. You hadn't seen large moves in the stock market really dating back to August. And so largely you had a market that was kind of waiting for something to happen, waiting for a bad news catalyst. Tariffs turned out to be that bad news catalyst. And the key with this tariff story for the stock market dating back to April has really been China, right? You just highlighted that these tariffs being placed on China, well, that is a key, of course, partner for a lot of US companies and a lot of large US tech companies, right? You think about some of the companies that have really driven the stock market higher, like an NVIDIA, Amazon, Apple. Those companies have large exposure to China, so they fall even more when the tariff news has to do with China. So that's sort of what drove that market sell-off yesterday.
So if bad news from China drives it down, does good news from China drive it up?
Potentially, yes, right? So really what had been happening in terms of the tariff story had been, okay, it seems like the tariffs are going to be lower than initially feared. That was a positive catalyst for the market. And then we didn't get a lot of updates in terms of where this tariff story was over the last couple of months in terms of the US and China. So I do think if those tariffs don't end up being 100% come the end of the month, that could be a positive for the stock market. Or if eventually they aren't 100% even a couple months down the line, yes, I think that would probably be a positive market tailwind.
So let's talk about gold. Are we seeing some kind of gold rush right now? What is this?
Yeah, gold up over 50% this year, Perry. It's one of the best performing assets in markets. It's doing better than the S&P 500, the Dow Jones Industrial Average. And what you're seeing with gold, really, so we're talking about tariffs, we're talking about political uncertainty. That's typically a time where people would turn to an asset like gold. So it's sort of a safe haven asset that investors look for in times of uncertainty. Of course, 2025 has brought a lot of political uncertainty. So that's been a key tailwind for gold. You also have the inflation story, right? A lot of people like to buy gold when inflation is expected to be higher or remain higher. Tariffs are impacting inflation. Inflation has not come down significantly in 2025. So that's been a boost for that gold story as well.
Do we know who is buying gold? I mean, like, who buys gold? Who does this?
Yeah, so it's an interesting study out of State Street actually pointing out that millennials buy a lot of gold. So 60% of millennial investors that State Street had surveyed found that they were buying gold, actually more, and that was more than what you saw for Gen X or the boomer generation. So you see a lot of millennials buying gold. Also important to point out when we talk about gold, you often talk about maybe that's saying something about the US economy, right? Is the US economy headed for a downturn, or is this an uncertain time for the US economy? But gold is a global asset, right? And so this past week, actually a key catalyst for gold was a new prime minister in Japan. That prime minister is expected to perhaps keep interest rates lower and also include economic stimulus in their plan. That could be, again, inflationary. So then you had Japanese investors actually flooding to gold. So again, the global nature of gold as an asset is also important to this story. It's not just US investors that are buying it, but it's investors all across the globe.
So, I mean, anybody, like some average Joe, can they just go and buy gold and invest with that? How does that process work?
You can actually buy it at Costco.
Oh.
That's sort of a fun fact. Costco started selling gold bars a little while ago that essentially matches the market price. But really, the way a normal investor or a typical retail investor, if you're just logging into your account online, how you'd sort of access it, Perry, would probably be through an ETF. So you buy an exchange-traded fund. They actually hold the gold for you. You pay a fee, but you get access to similar price action. So again, sticking with our State Street theme here, they hold a lot of ETFs, a lot of popular sector ETFs. GLD would be that ETF that you could find on an exchange trade platform. So the price of gold, just gold futures, are up 50% this year. That ETF is also up 50%. So that's how you and I, normal retail investors, would be able to access sort of the price action of gold and be able to benefit from that.
So next time I go to Costco, get a hot dog with a side of gold. Josh Schafer.
Hot dog and a side of gold. There
Josh
you go.
Schafer, thank you for joining us.